I think most of the unexpected rise seems to have come out of shelter costs and gasoline, or at least that's what the BLS said. I think the really interesting thing here is, and Neil and Ira were kind of touching on this, we can talk about the neutral rate, R star, the natural rate of interest, all we want, but the inflation data doesn't seem to be bearing out that entire thesis. And in fact, I thought it was really interesting last week. It kind of flew under the radar, but the Bank for International Settlements published a paper where they basically said, like, R-star's kind of useless, and we should probably just be looking at observed inflation instead of trying to observe this unknowable neutral rate.
That's called the gospel according to Tom Keene. Joe, what's your insight here right now? I mean, inflation's oppressive. I just quoted Argentina with 276% annual inflation. That's oppressive.
Are
we oppressed?
Well, we still have real wage growth, as Neil was talking about. As Neil mentioned, even consumers' own expectations for inflation via various surveys have come down. So I think there's an argument that we're not being oppressed by inflation. It's still bad. There's two things that I'm thinking about, which is that there is this view among many, the sort of Powell, Waller, Bullard camp, I would say, that policy is tight right now. And on some level, and this goes to Tracy's point about the unknowability of neutral, it's like, if inflation keeps surprising to the upside and maybe accelerating a little bit since the last year, what do these words tight even mean in the context of the observed reality that inflation is drifting up? The other thing I keep thinking about, we have futures down today. Currently, S&P futures down 1.2%. The story of 2024 has been hotter than expected inflation prints and a red hot stock market nonetheless. So in the short term, yes, this is certainly a bump. But it has been interesting that that first cut keeps getting priced out further and further into the future. Now just 50 basis points priced in. And by and large, the stock market, by any outside of today, still doing phenomenally well.
Exactly. And Tracy, I'm just looking at, for context, seeing Bloomberg reporting here, shelter and gas combined contributed over half of the overall monthly increase. That's kind of what people feel month to month, day to day. This is I put in our internal chat, this is a problem for President Joe Biden. I mean, inflation, you don't want to see that thing coming back.
Well, I guess there's two things we're kind of learning here, which is one, a lot more people seem to care about how much things cost than the actual employment rate, right? Like the number of people buying stuff is just always going to be bigger than the number of people who are actually unemployed. So I think, it's great that the Fed can go out and say, well, the the unemployment rate is at decades low, but the thing people see the most in their day-to-day lives is the grocery price or the price of gas or whatever. So that's one thing. And then the other thing I would say is, I think Biden has been tackling this issue in some new and slightly innovative ways, including talking about price gouging, talking about profit margins. And again, the rate of inflation on the stuff that is a daily need for people is where we see the most impact, right? So people have to buy food, they have to gas up their cars, whatever. They don't have a lot of competition in that market.
Paul and I don't have a real life. We don't travel. You guys are like jetting around. The Gulf Stream and usual. The rest of the country, are they is Arkansas or Texas, are they in disinflation while we're oppressed here in New York? I mean,
I don't think so. I don't think so at all. I think
you can see the regional CPI numbers.
Yeah, and I don't think there is some pocket of the country that's escaping it. And in fact, I think in a lot of these markets, you see hotter than expected inflation, in part because there's just been so much rapid growth and so much strain on the local resources due to the influx of population, which kind of maybe negates other advantages.
Okay, I got to talk about odd lots here. I'm going to put in the timeout chair. They're handlers. They get upset.
Our rider.
You go off the thing. I mean, if you're in Calverton, New York, out by the Hamptons on a given weekend, and you got to figure out what to do with acreage.
Oh, yeah.
You weigh in with a Tractor Supply Cub Cadet, 54-inch, 24 horsepower, riding lawnmower. That's what you do.
Tracy is too.
You guys talk to, well, she's got the man's mode out for the dog. I mean, the dog needs exercise. But what did you learn? I mean, this is like classic odd lots.
Yeah.
You're talking to Tractor Supply. What'd you learn?
So we had the CEO out tomorrow, comes out tomorrow, and we're going to learn why Tracy keeps having to spend more and more money on
I am
pet
the
feed
modal
and stuff.
Tractor Supply customer.
But the really interesting thing economically with them, and it even speaks to what you were talking about with Texas and Arkansas, all that, is that there are some COVID booms that happened and then reversed. Yeah. Peloton, Zoom, et cetera, and then we sort of went back to normal. This move out of the cities has not really negated. And people are moving further and further and further apart. This was not just a one-off shock, and so it benefits their sort of strategy, which they sort of proudly say, we don't have anything near New York, but we have 3 stores near Odessa, Texas.
Paul, you're living this, and Joe and Tracy, I don't have a life, but the bottom line is Joe is 100%. I saw it just today with the eclipse, Monday, Tuesday, into this Wednesday. I'm sorry, they're out in Calverton or up the Hudson River.
I know.
I mean, that's all there is to it.
You guys also had a recent interview about U.S.-Mexico freight. I got to think that is a great growth story. I think about with the Canadian Pacific bought that railroad. Now they can go from Canada all the way down to Mexico.
Yeah, so we spoke with Matt Silver, who's the co-founder of this new company, which is building technology basically to facilitate cross-border trade between the U.S. and Mexico. And he's been talking about how it's booming. You know, there was always auto production, manufacturing in Mexico, but that's really picked up. Yeah. And the point that he made, which seems kind of obvious, but I guess I hadn't internalized it, was the idea of Mexico having a competitive advantage just because of its geographic location next to the U.S. and the fact that it's in the same time zone. Yeah. You can go down to Mexico, drink tequila with a potential business partner, and fly back to the U.S. in a day, right? Try doing that with China.
One of the two.
Yeah, that too. You need recovery built in.